Thank you very much, Michelle, and thank you, Chair Powell, for taking our questions. The latest FOMC materials say that the FOMC thinks it will be appropriate to keep rates near zero until labor market conditions reach levels consistent with maximum employment. And there are also 3 rate hikes penciled in the projections for next year. In order to set up those hikes, what will maximum employment have to look like? When will you know that that threshold has been met? And how will that be communicated? Thank you.
So maximum employment, if you look at our statement of longer run goals and monetary policy strategy, maximum employment is something that we look at a broad range of indicators. And those would include, of course, things like the unemployment rate, the labor force participation rate, job openings, wages, flows in and out of the labor force and various parts of the labor force. We'd also tend to look broadly and inclusively at different demographic groups and not just at the headline and aggregate numbers. So that's a judgment for the committee to make. The committee will make a judgment that we've achieved labor market conditions consistent with maximum employment. When it makes that, it is admittedly a judgment call because it's a range of factors. Unlike inflation, where we have one number that sort of dominates, it's a broad range of things. So as I mentioned in my opening remarks, in my view, we are making rapid progress toward maximum employment. And you see that, of course, in some of the factors that I mentioned.